Hello, everybody, and a very warm welcome to the podcast. I am your host, Paul Lanfear. And before we begin, as ever, my inner lawyer needs to tell you nothing in the podcast is financial, health, or legal advice. And that could not be more important in the context of this podcast, as you'll discover in a moment. It is with genuine delight I introduce Zoe Priselac to the podcast as a returning guest. Zoe, how are you?
I'm very well, Paul. Thank you for having me again today. Really excited to be back.
Yeah, it's really good, and wherever you are is looking extremely glamorous. I shall tell you that. For the people watching on YouTube, they'll see what I mean. Zoe's in a fabulous looking kitchen now. Um, Zoe, you have been on the podcast before, and I would invite people to kind of seek out that podcast. It's one of the earlier podcasts we did called "Losing a Loved One to Protecting Life," and it's all around your origin story. Um, but today we're speaking to you in the context of this whole subject of protection, which I'll explain a bit more in a moment. But you're the MD of uh, uh, Way More Solutions, and you're involved in protection and health insurance and wills and estate planning to a certain extent, and that's why we're here today. So I. I'm going to give another health warning in a minute, but before I get on to that health warning, why am I talking to you about this? And I ask that because, I meet lots of people, and lots of people have like really the businesses they're really into, and they have lots of goals. But I really see in you that you're like a woman absolutely on a mission. Like it goes well beyond a business, it goes well beyond, goals and even life ambitions. Like you have almost like this obsession in a positive way about protecting families and looking after people when the worst happens. So in a few sentences, tell us why we're talking to you about protecting the assets.
Well, it basically comes from personal experiences, Paul, because I've been there when this protection isn't in place, and I've seen the result of that. So I sadly lost my mum to cancer when I was a teenager. So she was diagnosed when I was 15, in the middle of
Mhm.
doing my GCSEs. And she didn't have any protection in place, sadly. My father didn't work for the last year, 18 months that she was unwell. He was self-employed because he was spending time with her. They spent their savings on alternative treatments when it was clear that the chemo and radiotherapy wasn't going to work. So when she sadly passed away, Dad was left without a business, without any savings, with a mortgage, with two teenage children. I was going to university, and that huge financial stress that he had, alongside obviously the bereavement and losing his partner, who they've been together, married for 28 years, together from being 16, and the difference it would have made to him if she just had some life insurance to take that pressure off. Pay
Mhm.
off the mortgage, give him some time, to grieve. It would have made such a difference. And then
Mhm.
myself, years ago, 10 years ago, over now, before I moved into this industry, I myself was in a serious road traffic accident. I needed a number of surgeries after that. I had PTSD at the time, and I didn't have any protection in place because I was young, didn't have any children. And I realized that actually this is really, really important. So after having those two experiences, seeing, a parent passing away and the impact on the family financially, and then myself, even as a single person at the time, without, any children or any ties, how important it really is to make sure that you have the financial protection in place for when you need it.
Yeah, absolutely. And this is a subject which I feel really passionately about and really have very strong views on. I always start the podcast by saying like not financial advice, but if I was going to give financial advice, which of course I'm not, it would be around this. It would be, I think this is actually so misunderstood. There are people believe all kinds of things that just aren't true. People are so confused about this subject matter. And I think what that does is it puts people off putting in place just the absolute basics, and the basics, the absolute fundamentals can get you a long, long, long way. From a personal perspective, I've now lost two really good friends in the property space, and I have witnessed firsthand, you know, um, this universal truth, which is that, when we lose people, the important act is the grieving. That's the most important thing. But the way that and I say this as a former lawyer, but the way that our legal system is set up is that you are then forced into one of the most um, complicated, admin-heavy activities that most people will do in their own lifetimes, which just doesn't make any sense, does it? Really, families and business partners and people and employees, everybody around the person should be able to focus on the grief. Now, we are going to naturally, given the subject matter of this, it is a sensitive subject. It's a difficult subject and it's a taboo subject. So, for those watching and listening to the podcast, obviously I'd say straight out of the gate, if this is a difficult time for you and if this is a subject matter, which is going to be problematic, I think definitely the answer is to speak to somebody. That is the solution, to so much that happens within a human being. So if this is difficult subject matter, obviously Zoe and my hearts go out to you, and we hope you can find the support that you need. We're going to deal with it pretty practically. So like the purpose of the podcast is just to be like super practical, because it's one of those subjects that people don't discuss very much, and there is a bit of a to about it. There's too much mystery, and really what I'd like to get to the end of, and in the next 45 minutes, is just super practical. This is what happens, this is what we need to think about, and these are the solutions. Zoe has very, very kindly agreed to offer to everybody listening to the podcast a consultation. So the link to that will be published later. And so I just, thank you, Zoe, for that. That is a really invaluable thing. I mean, we've known each other for years. 30 minutes of Zoe's time, is going to be a game changer for you. I can absolutely tell you that. So, what else would I say? This is a longer introduction than I normally do, but this is such an important subject, and it's such an important thing to me personally. I think also as well, if you're put off by the subject matter, give yourself a deadline. I would say once a year, check in on these things, and I would say do it for 1 month. So we're recording this on the 1st of May. Give yourself a deadline, to just have a look, decide what you want to do, put the things in place, and then forget about it for another year. Liz, my wife and I do it every April, and you can pick whenever you do it. But it's an annual process. Doesn't need to be arduous. The benefits are absolutely enormous. So, Zoe, what happens? When we do lose somebody. So talk us through those steps, and what the consequences are. Start with the basics for us.
So, when somebody passes away, the first thing that needs to happen, in terms of, assets and property is probate. So, ideally somebody would have a will in place. You need to submit to HMRC, the value of their assets, their property. If it is a more complicated estate, you may want a probate solicitor to help you with that. And then in terms of probate itself, all debts have to be paid. Then legacies are fulfilled, and then the residue is distributed. So it's very, very important to have a will in place, to help with that process. If you don't have a will in place, then what basically happens is the court decides what happens to your assets. It's out of your control, and they follow a set of rules called the rules of intestacy. And the rules basically mean that, if you pass away without a will, everything will pass to your spouse if you're married, up to a certain amount, certainly up to 322,000. If you then have children over 18, then over that it would be split between the children over 18. If you have a partner and you aren't married, then that individual has no entitlement to your assets. And again, you want to ensure that your assets pass to who you want them to pass to, in the percentages, and as you wish effectively.
Very good. And If you had children, or any specific, so God forbid you're in any form of partnership and both of you were to die at the same time. I mean, it's a horrendous thing to think about, but for example, in a car accident, what implications would there be for children in that respect?
So another reason for ensuring that you have a will in place is so you can appoint guardians. Because if you did have the sad situation where children were left without parents and guardians weren't appointed and they were under 18, then again, the court decides, who will look after them. They could go into care, they could be taken into care whilst they decide. They could end up being with, family members who you wouldn't want them, to bring them up effectively. So again, really, really important to appoint guardians within a will. You can put other specific wishes in there. You can also include funeral wishes in there. I would always say that you should make wishes like that clear to your family, because often, probate, the will is read after, that has taken place. But really, really important to make a will because you may have a partner that you aren't married to, which means that they won't be entitled to anything. B, if the rules of intestacy apply, it may not go to who you want, your assets to go to. And C, if you have children under 18, then, it's really, really important to appoint guardians.
Yeah, very good. And then, so if we just dealing with the fundamentals, obviously it makes sense to have a will in place. And do you know what? It's one of those things which is easy to do, but easy not to do. I frequently will check in with people and ask how progress is being made on a yearly basis with their will. And there's lots of people floating around without a will, but yet they've got lots of assets. And so I think, it's that thing I sort of started the podcast with set yourself a deadline, get a will within the next 30 days, and, start with the basics. So imagine now we've got a will in place. What are the other useful sort of documents that might be helpful?
Well, certainly a lasting power of attorney. And this is where you can appoint one or more attorneys to deal with your affairs if you are incapacitated. So historically, I think people have thought that, only the older generation need to put in place the lasting power of attorney before they lose their marbles type of thing. But actually, there are many reasons why somebody could be incapacitated. They could have a heart attack, they could be in a coma, they could be in a serious accident. I always give the example, one that I share is Derek. I can't remember the name of the lady. Derek, he went into a coma following having COVID.
Yeah.
You'll have seen me share on social media. And effectively, she was left in a position where she couldn't access bank accounts. Even joint accounts can be frozen because the Court of Protection effectively has a duty to protect the individual that is incapacitated. So even if I have a joint account with my partner or husband, I could go on a shopping spree while he is incapacitated, isn't around. So, there is this, duty to protect that individual. Also, she couldn't do things like, renewing insurance, car insurance, anything financial. People tend to think that just because you're married, you can do things for your partner, and actually you can't. So certainly a lasting power of attorney that would deal with your financial and property affairs. So that's anything financial, property, insurance. You may also, if you have a business, put in a specific lasting power of attorney for your business affairs or specific to particular businesses, because you may have certain individuals that you would want to deal with your business affairs and certain for your personal affairs. And then there is also a lasting power of attorney as well for health and social care, and that's to make sure that if you are taken into care, that there is somebody that can make health decisions on your behalf, about your treatment, where you might go into care. And also you can decide who would make things like decisions on life-sustaining treatment, which, I know it's something that we don't like to think about, but, in that situation, would you want to take that decision away from your family and have the doctors make that decision, or would you want your family to make that decision on your behalf after taking advice? So certainly lasting powers of attorney, and they should be done, as soon as possible, because you just don't know what might happen and what could be around the corner. And I do get approached by individuals whose, parents have had, a diagnosis, early, onset, dementia or something like that. And then at that point, it's going to be very, very difficult to be able to put, something like that in place. So the sooner rather than later, once it's done, you can forget about it. So certainly lasting power of attorney as well. And also, life insurance. You don't want to be in that situation like my father was, where your partner's passed away, the surviving partner's spouse, children, they've got mortgage debts to deal with, they need time to grieve. Really, really important that you put some financial protection in place for your partner. It's not as simple as, my partner will get the house. As I explained, the order of probate, the first thing is that, debts need to be repaid. And it could well be that spouse, at that point, if they need to remortgage, or, in future when they're remortgaging, maybe they can't get the mortgage on their own with their income, maybe they don't work. So it's not as simple as, my property, my house, will pass to my family members. And if you can have some life insurance in place to help pay off those debts, give them a financial safety net, it will make that period of time easier from a financial point of view, whilst they are dealing with the difficulties and grieving.
Definitely, 100%. I mean, this is just purely an expression of my personal opinion. Everybody will have their own personal opinions, and you certainly don't listen need to listen to mine. But I think about that first year. Think about the first year without that key individual, and think about how we can make it as smooth as possible. And I would say, if they've got the resources to sustain themselves, imagine everything, got shut off. Every single income stream suddenly disappeared. But imagine they had, a year where they were financially stable and they'd had the opportunity to grieve properly, but also then attend to all the, when they're ready, with appropriate, support, the other aspects, the businesses or the investments and all the rest of it, and decide what they want to do. It's surprised me, when you see very tragically we lose property people, and you would imagine, or they would imagine, that the beneficiaries would want to continue with property, but that's not always the case. People take stock and they decide, what they want the future of their family to look like, and that might not include having multiple property businesses, for example. So let's circle back, because I think there's some really fantastic stuff there. So you mentioned the two powers of
On
attorney.
that point, I've just remembered the example, Kate Garraway, her husband.
Kate Garraway,
Yes, and she's
yeah.
been in the news so much. So her husband, Derek, caught COVID, was in a coma for a long period of time. He
Yeah.
was very, very poorly. And now you have seen, I'm sure, all over the news that she's really struggling financially. She has his care to pay for, considering, selling the house. So what they should have done is have lasting power of attorney in place. So that would have made things a lot simpler for her whilst, he was incapacitated. And also various different types of life cover could have been put in place there, which would mean that Kate wouldn't have been in the situation that she is now.
And that's, I think, a really useful high profile example. And like, kudos to her as well for being so open and transparent, which is obviously, must be incredibly difficult for her to offer that transparency to the world. But, by sharing it,
Absolutely.
and then by people like you, like spreading the story even further by shining shining a light on it, it helps us all understand, what potentially the consequences are. I mean, only, certainly in the last year, somebody was telling me that their husband was involved in like a very serious accident, and happily they're protected. But without that protection, obviously it'd be more complicated. So in terms of the powers of attorney, we've got kind of the financial one, and then we've got the health one. So just sort of circling back to those, um, you know, I know this is a bit of a bleak thing to say, but like, just thinking for myself, I almost think it would be worse to be permanently incapacitated than it would actually, to die, because you're, because of all the complexity that it creates. So definitely power of attorney around the financial matters. And, I suppose who this people that we're really trying to speak to in this respect is, if you're kind of the entrepreneur one, you're the freelancer, you're the self-employed one, and your partner doesn't really have visibility of the nuts and bolts of the operations, um, we need to think about that to make sure. I mean, I was at speaking events, I always ask the audience by to show a raise of hands, if you didn't go home tonight, in 30 days time, would your partner and family have access to the funds they need to continue life? And it is absolutely staggering. Not many hands go up, let's be honest. So power of attorney, absolutely crucial. And then obviously in terms of the health decisions, um, only speaking for myself, there's, you know, me and one other person on the planet, I would want to make health decisions for me, and so I
Me
would
too.
want that person just to make those decisions with my full authority. We've sat down, we've had the chat. We both know, what in what circumstances, we wouldn't care to continue and all the rest of it. And these sounds like really heavy conversations that don't really need to be. It's just like, well, what would we do? Well, I wouldn't want that very much, so I would want you to do this. So I think they don't need to be necessarily the heaviest conversations. They just need to be honest and open, and in the context of a loving partnership, it's a perfectly yeah, it's a quite sweet thing to do, I think.
Absolutely. And I think that, people often think that the process for putting these things in place is going to be really difficult and admin heavy. Actually, it isn't. You just need to have a conversation, know the things that you need to decide on.
Mhm.
And then once you have decided, the basics of who you want in the will, the type of will that you want, a will versus will trust,
Mhm.
um, you know, executors, trustees, guardians, your wishes, what you would want to happen, and who you would want to appoint as attorneys, who would make health decisions. Once you've made those decisions, the process is then straightforward. Then your estate planner, solicitor, can execute those instructions, and it really is much more straightforward than people think it's going to be. I mean, you yourself, Paul, you have done all of this, so I'm sure that you can attest that actually, it isn't a lengthy
100%.
process.
It's not, I think, and it's a lot more. I think the concept, it's like everything in life, isn't it? The concept of it is more daunting than the reality of it. But you just need to make some key decisions. You just need to have some key names to go in with, and you probably know those names instinctively, who you'd want to make decisions on your behalf, who would be capable and what have you. You just have those names in the forefront of your mind. Have the conversations with the relevant others. I would always make sure somebody's up for it. If you're appointing them a guardian, for example, of your children, I think you probably need to have the conversation around that and say, look, this is what we're looking at. And yeah, but as you say, I actually think it's a lot more straightforward than it is.
Yeah.
And yeah, and especially when you're not doing it alone, but you're seeking out appropriate guidance and you're being kind of walked through the process. So I think those are some of the fundamentals. Um, let's move on to protection then.
Hmm.
So I think I was reflecting upon this before the podcast. When I was in corporate life, in a way, you kind of get your hand held to you a little bit. So every year I'd get like an annual list of benefits and I would just double click on the ones that I wanted. So, that could be anything from private medical to the dental cover and all the things they give you in corporate life. And one of the things they give you is X times salary for death in service. But when you leave that arena and you go as a freelancer, self-employed, entrepreneur, business owner, or you don't have an employer with such generous packages, you're kind of a little bit on your own in this respect. And life insurance, in my view, is just like an easy win. And I think it's an easy win from the perspective of you've been to lots of my breakfast meetings. When this comes up in conversation, I always say, as soon as you own your first asset of any description, get a will, hopefully the bits and pieces, and then immediately take out appropriate life cover. So let's talk us through the whole. Think about it as a menu, but like what's on the menu when we get to protection from an insurance perspective?
So from an insurance perspective, you've got kind of three main types of insurance, if you like, from a personal point of view. You have life insurance, which pays out on death or terminal illness, which obviously we can circle back to. And there are actually different types of life insurance as well. You know, you've got term, you've got whole of life, you have relevant life plans that a business can pay for. And then the other areas of protection are about, you know, protecting you whilst, you know, you're still here and whilst you're alive, and making sure that you can still, you know, kind of cover the bills, pay for any treatment that you may need, you know, have that financial safety net. So there's also something called income protection, which basically gives you a monthly income if you are unable to work. And the idea of that it would at least kind of cover, you know, your essentials of what would be needed, you know, ideally the household essentials if you can, and, you know, ideally that would pay you out until you are able to go back to work. And the benefit of income protection is that you can actually claim on it more than once, so it doesn't end after you've claimed. You can have different policies, you know, that may pay up to 2 years or 5 years per claim, or full term, for example, you know, right up until the end of the policy, which is the case with one of my clients, sadly, at the moment. She will never work again. She has an income protection policy that will be paying her until her state retirement age of 67. So that is to kind of cover the essentials. You know, you can make the mortgage payments, you can make those regular payments that you still need. And then the third type of protection is critical illness cover, and that gives you a lump sum if you are diagnosed with, you know, specified critical illness that is covered by the policy, and that is to give you, you know, an extra cushion. It may be that you have extra expenses because you are unwell. You know, you may be going to hospital appointments. You know, you may be paying for parking, you may be paying for supplements, you know, all different types of things that actually people don't realise. I think the stats are, you know, it can cost up to sometimes £700 more a month if people are critically ill with something like, you know, cancer or something like that. And what also may happen is that your partner may actually need to take time off work because you're unwell. They may need to take you to appointments. They may need to look after the children if you're unwell. They may simply want to spend some time with you because, you know, sadly, you know, it may be a situation with, like with my mum, you know, that dad wanted to spend, you know, time with her because, you know, she wasn't going to be with us. So that then affects that person's income. So it really does have a wider impact on the household. So, you know, critical illness would pay out a lump sum to give, you know, that kind of financial cushion during that period of time. And, you know, just to note that, you know, these policies do, you know, pay out tax-free. Often people aren't aware of that. And whilst we're on that, I would like to bust one of the myths that tends to come up with life insurance. You know, some people think that, you know, these policies don't pay out, or, you know, providers try, you know, to get out of paying. And I think that's because of experiences more within the general insurance industry, you know, buildings and contents, travel insurance, you know, what is in the, you know, terms. But with life and health insurance, I mean, you can Google the stats. Every year, the percentage that pay out are between the mid to high 90%. And the main reason for a policy not paying out is that non-disclosure. Somebody hasn't been honest on their application form, and if they had have been, that would have affected the terms that were offered in some way. So, you know, that's the main reason. Then it may be that, you know, unpaid premiums, or the policy had actually ended and, you know, somebody calls up to claim. But, you know, the main reason is non-disclosure. So it's not at all that, you know, insurers try not to pay out. It's a very, very high payout rate that is had with these policies. And again, you know, this also comes back to, I would say, making sure that you have advice on these policies. You know, sometimes people go online. I think it is something like about 30 odd % of policies people purchase online. I think one of the reasons is people don't understand that actually advice is free. I think they think that, you know, if they come to an advisor, they will have to pay for it. Actually, you know, life insurance advisors, we are paid a commission by the insurer. And I think what people don't also realise is that they don't have access to more comprehensive products. They're definitely more basic products that are online. They won't have access to the tools that we do to compare. And a big thing really is the medical underwriting side. So, you know, when you apply for life or health insurance, you fill in an application and you give information about your medical history. And based on that, you are then offered terms, which could mean there may be an exclusion on a policy, or it could affect the price of the policy. It could increase the price. So, you know, I will have the conversation, you know, up front with the client about the health. And then I look into which providers would offer the best terms for them.
Mhm.
You know, and I will get referred, you know, individuals sometimes, you know, a client will say, can you speak with my partner or my family member or my friend? You know, they've applied online, you know, they've received a decline. You know, I speak with them within 2, 3, 4, 5 minutes. I know what the issue is and I know what we need to do, who we need to apply to, or etc. So really, really important to, you know, get advice from a specialist with anything like this. And then going back to the life insurance side of it, you know, again, if you are purchasing a policy online, you won't be putting that life insurance policy into trust, and you know, that is something which is really, really important.
We'll get on to the trust in a moment. I'm pleased you raised that. So I think just to echo some of those comments as well, this is definitely not something that you would want to just do in like 5 minutes just by plugging some details into like a portal and seeing what's spat out. If you think about it from, you know, if we look at another part of just in the property industry, you know, getting mortgage finance, for example, there is such a stratospheric world of difference to attempting to do it yourself and going to a whole of market mortgage broker with specialist knowledge who can just look at you and say, there's 2 or 3 lenders who will be really interested in this. I know there would be, rather than, you know, taking you around the houses and all the rest of it. And I think that's definitely right with it in insurance as well. And presumably, and I almost don't need to ask this, but it's sometimes useful, isn't it? I mean, presumably it's similar to when I was a lawyer. You know, people would sit down, they would tell me their secrets, and you know, I both professionally but also personally, I knew I would take them to the grave. You know, I would never,
Absolutely.
you know, and presumably that's true in your industry as well.
Yeah, absolutely. And, you know, I understand that, you know, sometimes, you know, to talk about, you know, health, you know, family history, it can be a really, really sensitive subject. But again, that's why you need to have somebody that you can trust and not, you know, online at a computer. You know, I was in a situation I spoke about earlier, the car accident that I was in over 10 years ago. Um, Following that, I had to have various surgeries. I had PTSD. I had a period of time off work, and you know, I thought to myself, oh, you know, income protection. Actually, this is something that maybe I should have in place. And then at the time, when I wanted to put the income protection in place, I couldn't. Because I had various surgeries planned and pending. You know, if you have a certain number of exclusions that would go on the policy, you know, it would decline. And I was left thinking at the time, you know, there's nothing wrong with me. You know, I was fit and healthy. I'd never had anything wrong with me before. You know, I've just
Yep.
kind of been in a car accident. And, you know, this is why you need an advisor who can be empathetic, explain, you know, this to you. And sometimes, you know, if somebody can't get a particular type of cover at the moment, there could be other options, or they may be able to in future. You know, and that's why, you know, it is important to use an advisor. Of course, everything is treated in the strictest of confidence. And you know, I've been there. You know, I've had a situation where I've struggled to get cover. I've had a mum, you know, that didn't have cover in place. You know, I want to do my best to make sure that people, you know, can get the cover that they need.
Mhm. So let's circle back to the life cover. And you used some terminology that people will be unfamiliar with in terms of the different kinds of life policies that we can get. So do you want to just give us a bit of an overview of those different kind of policies that you mentioned then?
Yep. So first of all, you have term life cover.
Mhm.
So that is a type of life cover that would be put in place for a specific term. So it's typically used, for example, to cover a mortgage. You know, so if somebody has, you know, £300,000, you know, mortgage over 25 years, they may put in place a policy for £300,000 over 25 years. That could be a decreasing policy. you know, because a mortgage decreases, but that effectively is a term policy. It is put in place for a specific period of time. Could be covering a mortgage, could be to retirement age or something like that. And then another type of policy is a whole of life policy. This is a policy that you would pay for the whole of your life, as the name indicates. And so what that means is that that payment will be made, you know, at whatever age you are when you pass away. And that would typically be used for things like either leaving a legacy because you want to, you know, leave X sum to your family if anything was to happen. And secondly, it can be used to pay an inheritance tax bill. That's what it is commonly used for. So, you know, if somebody has knows that they have an inheritance tax liability on their estate, they've done, you know, as much as they can to mitigate that by having the tax planning advice. You know, if there is still, you know, a liability, they can put a policy in place to cover all of that, you know, or part of that. And that would pay into trust and then be used to kind of settle that liability on their estate. So that's the whole of life policy. There's also a type of cover called family income benefit. And this is where you can actually have cover that pays out as an income. So it can be taken out as a critical illness policy, again, for a term, but as life cover too. And people will typically put in place family income benefit as a life insurance policy if, you know, aside from the you know, liabilities and lump sums, they're wanting to leave an income to their partner. It could be because they have young children at the moment and they want to make sure at least until you know, the children are 18, 21, 25, if something was to happen to them, an income is left. It might maybe to help their partner kind of maintain their lifestyle. You know, if you think about it, if one in the household passes away, that can have a significant financial impact. It could then make it difficult for children to, you know, continue with their schooling if they go to private school, go to university. You know, you may have wanted to contribute towards weddings, you know, and all the rest of it. So family income benefit, again, would be something that you would put in place for a term and it would give a monthly income. And then finally, there is also a type of cover, which is a relevant life policy. And this is a policy that you would put in place for family protection. And it's like having your own personal death in service plan. So you need to be the employee of a business. It's very you know, popular kind of with directors, you know, that have limited companies because it's a policy that the business can pay for. So, you know, it makes sense if you do have a limited company, you know, to put in place life cover that your business can pay for instead of you paying for it personally. And on that note, actually, circling back to what you said about, you know, company benefits and death in service, you know, I always say to, you know, clients, if you have death in service, fantastic, but always see that as an extra because you can't guarantee that your employer won't change the benefits package. You know, what happens if you're made redundant? What happens if you move to another company and they don't have the same benefits or any benefits or the same level of benefits? You know, then you will lose that cover. The younger you are, when you take cover out, the cheaper it is, the less likely it is for you to have, you know, exclusions or ratings on your policy. So the sooner the better. So I would always say to clients, you know, put in place what you can financially, you know, at least to cover kind of the essentials of what you need. Anything that you have through an employer, fantastic, but see that as a bonus.
Yeah, definitely. So start early, think about it earlier. As you know, as you've heard me say in breakfast meetings, you know, as soon as you've acquired that first asset, whatever it might be, think about that. Like this is the trigger, isn't it? It's like, think about, you've got to have a will because it's got to go somewhere. Think about the insurance, and you know, through listening to you, you know, it is one of those things that will evolve over time. You know, your circumstances will change. You know, the arrival of
Absolutely.
children, for example, is going to be one that might, you know, really change your thinking on things. Um,
Definitely. I mean, I would, you know, we do an annual review with clients for that reason. You know, just to give them a reminder, you know, has anything changed? This is the
yeah.
cover that you have. Is it still adequate? You know, do we need to change things? And circling back as well to, you know, the fundamentals of what we need, we also need to make sure that our family know what these things are, you
Yeah,
know,
yeah.
that we have them and where they are. I mean, you can register on the National Wills database to stay where your will is. You know, I personally think it's a good idea to have a secure storage facility where, you know, all of your documents are and instructions are. You know, they need to know what policies you have, you know, who the trustees are, copies of the trust documents, you know, copy of your will, any memorandum of, you know, your kind of letter of wishes. Really, really important. You know, something which is growing and growing, you know, is crypto. You know, obviously, you know, mentioning your will, you know, that you have crypto, who you would want it to go to, but, you know, then what happens? I mean, passwords, ledgers, you know, again, you should have don't put it in your will because it's a public document that goes public after you pass away. But again, you can have a separate memorandum with instructions. You know, this is what I have. You know, these, you know, the websites. These are the passwords. You know, you might need somebody a bit more tech savvy in that instance. You know, as one of your executors who could help. And then that memorandum is something that you can kind of keep updating as you need to. But you know, as well as doing these things, you really, really, really need to, you know, make sure that the people who need to know where all these documents are, and that you know, you know, in a secure storage, wherever they are, that everything that they need will be there.
I think that's really excellent advice, practical advice. I mean, that deserves its entirely own podcast on its own, but I would urge people to re-listen to that and just think about the practicalities of it. You know, somewhere secure where all of these documents are, people know where there are, and there's a bit of guidance how to approach it all, not from a legalistic perspective, but just from a practical perspective. I think that's really excellent advice. There's something that you've mentioned that we should just hover over, which is the importance of putting insurance cover in trust. So what does that mean for people?
Yeah. So when you have a life insurance policy, you know, if that policy pays out and it isn't in trust, then that policy effectively forms part of your estate. So this can create kind of a number of issues potentially. Well, the first thing is that, you know, your estate has to be settled before any of the assets can be distributed. And, you know, that can take, you know, months, even with a will, you know, even, you know, longer without one. So the first thing is kind of speed. The second thing is, you know, who is that going to, you know, and the third thing is, if you are somebody that will have an inheritance tax liability on your estate, then again, those proceeds or part of the proceeds could be taxed. So all things that we don't want to happen. So what you can do, and you should do in the vast majority of cases, obviously, you know, take advice, is put a life insurance policy into trust. And what that means is, you know, the ownership of the policy is now the trust itself. And if you imagine when you pass away, a kind of box is created. Well, the box that has been created is there for the proceeds to pass into. So that means that they don't form part of your estate. So it means that your trustees can phone up the provider and have the proceeds paid out straight away, and they can distribute it to the beneficiaries. So you've got that speed. You know, again, the whole point of putting the life insurance in place is to make sure if something happens, your family are okay financially. So they need to be able to access that money quickly. The second thing is that you can ensure who the proceeds go to and when. So again, you know, if you aren't married, super important that the you know, your partner is nominated as a potential beneficiary under that trust. And also you can specify, you know, in your letter of wishes, you know, who exactly you would want it to go to, what percentages, and that and that can be updated. So you ensure who it goes to and when. And also, if it doesn't form part of your estate, then there won't be the inheritance tax liability. If there would have been one, that's number 3. And then, you know, whilst proceeds are in trust, you do have various other protections, you know, around them. You know, they're protected, you know, from, you know, care home fees, if that was relevant, you know, to any of the beneficiaries. And, you know, they are protected for the beneficiaries and the bloodline whilst it is within the trust, because the only people that can, you know, access those proceeds that have an interest will be, you know, spouse, civil partner, you know, children, grandchildren, anybody that you've nominated. The trusts are slightly different. Some are wider in terms of who are potential beneficiaries within your family. But, you know, effectively, you know, that then protects for your bloodline those proceeds, you know, against things like care home fees, you know, marriage and divorce, you know, of any of the beneficiaries. you know, various things like that. So very important to put life insurance in trust.
So obviously, in no way are you giving any specific advice to individuals, because everybody needs to get and, you know, really look at this on a one-to-one basis. But I mean, just listening to you, it sounds like that is something that should at least form part of that first conversation. Is, you know, like, you know, should it be in trust? Should it not be in trust? And people need to make decisions on that. You know, just listening to you, speed is often important in all things in life, particularly around financial matters. But, you know, if your beneficiaries, for example, you know, you're typically the person responsible for the finances of the household. You know, the worst thing you'd want is for people to have to wait or even have to take out debt whilst things get resolved. You know, speed of process would be important just from a practical point of view. Okay, so that's really useful and that's really clear. So then in the final part of the podcast, let's deal with perhaps some of the more complex issues. So, you know, I know lots and lots of people in property, and one of the key, often one of the key aims that people have is to get to a particular figure. And, you know, historically that might have been sort of £1 million worth of assets, not necessarily net assets, but, you know, that's like a target that people kind of run towards. And what I noticed discussing, you know, having conversations with people who have achieved that, is that they have quite complicated arrangements. So very often they will have business partners, they might have multiple companies, they might have investors, they might have joint venture partners. So there's actually quite a complicated landscape below the surface. So thinking about it, so that's one aspect of complexity. I think another aspect of complexity, what I alluded to before, is very often there is one of the people in a loving partnership, which is like the property person, and then there might be the other person who just has no interest, or they've got something else going on in their lives, and that might be like family stuff, or they might have their own business, and they're not necessarily as driven or as interested in the entrepreneurship and the property and all the rest of it. So with that quite complex, with those complex arrangements, give us some illustrations of how protection might help in these circumstances.
Yep. So, you know, if you have a joint venture with, you know, another, let's say 3 individuals, you know, doing a JV development project together, you know, those 3 individuals have, you know, 3 different skills. You know, one may be the one that kind of helps raise the finance. The other person may be good, you know, kind of, you know, the systems, you know, admin, all that kind of stuff. You know, and the third individual, you know, may you know, be experienced within construction, you know, have a development firm or something like that. Now, you know, if something sadly was to happen to one of those individuals, I think before when I've done a presentation, I gave an example where, you know, let's say partner number 3, you know, just happened to step out into the middle of the road, you know, trying to see, you know, have a look at the roof, and, you know, bus comes around the corner, you know, knocks them off, fallen off the roof. You know, these things do, you know, sadly happen. Then how does that affect, you know, the people that are left, you know, in terms of, you know, family and also business partners? Well, first of all, I'm sure that, you know, there's some development finance and investor finance that is involved in this process somewhere. So one of those individuals passing away, you know, what knock-on effect could that have? What if those individuals have given personal guarantees? What is the lender going to think? You know, will you know, will the, you know, recall the money? You know, how will that project continue? Will it now actually finish on time? You know, you've lost one of the 3 key individuals within that. So knock-on effect in terms of finance and actually being able to kind of finish the project as well. So that's one area. And then the other thing is, you know, what happens to the shares of that individual that has passed away? You know, typically those shares would form part of that individual's estate, and typically would therefore pass to, you know, their beneficiaries. You know, if they have a will, whether it is, you know, under the will, or if not, then the rules of intestacy. So that's the first thing. It could be that you are now suddenly in business with somebody's partner or family member who has no idea about property. Maybe you do or don't get on with them, and there could be some issues there. And what do you do about that? How can you buy them out? Do you have the funds? What people should have in place if they are doing a JV is a shareholder agreement. And within that, typically there would be various situations that might happen that would be covered. So in that situation, it may say, if one of the business partners passes away, then the company is able to purchase the shares from their beneficiaries. So that is, in an ideal situation, what you would want. And then the company is left with the issue, and the surviving shareholders is, where do we get the money from? To buy the shares? We could buy them, we could purchase the shares, but where do we get the money from? So these are kind of the issues that are created. So there are a number of different ways that protection can help in this scenario. So first of all, they could have had some loan protection in place that would effectively discharge the liabilities, or part of the liabilities, a third of liabilities. You don't want to be left carrying the can when one of your business partners has passed away. So they could be cleared. You could also have some key person cover in place, and that would effectively pay out to the business to give a lump sum to help mitigate against the impact that it's had, losing that individual. Having a cash injection buys you some more time, to decide what you're going to do. Do you need to replace somebody? Do you need to get a third party in? Do you need to get another development firm in to finish it off? Project manager, whatever that skill is, it buys you the time to be able to do that. And then the third thing is the shareholder protection. So what you would do is you would put in place life insurance on each of the three individuals, their lives, for the value of their shares within the business. Then it'd usually be what's called a cross-option agreement, alongside the shareholder agreement, that will basically say if an individual passes away, then their kind of surviving beneficiaries or the surviving business partners can act this agreement, and it basically means that the shares would then pass and be retained by the surviving business owners, and the family of the deceased shareholder would receive the proceeds, so they can be compensated. So you can make sure that your family is okay, and you can also make sure that the business can survive. And it's really important. Some stats that I shared in a presentation from L&G Legal in General, SME businesses, which actually are bigger than people think. If you're looking at from an accounting point of view, the definition of an SME, 1 in 4 SMEs would close immediately if they lost a key person, and a further 26% would cease trading within a year. So people tend to have various other insurances in place. It could be employers' liability, it could be public liability, it could be directors and officers. What's really important is the key people, which are the lifeblood of the business. So really important to have this type of cover in place to ensure that your business and your key people are protected.
Definitely. So I think that's really useful, and obviously it goes beyond the scope of a podcast. If you've got businesses, business partners, and all the rest of it, it's about taking bespoke advice. And I think between you as well as business partners as well, is having a plan as to what would happen in the worst case scenario. It's just better to have a plan than it is not to address it. And you can hear from listening to what you've said, Zoe, that there's some really elegant solutions that can be arranged where the current business partners, they can continue the business, but the beneficiaries, they can effectively have their interest in it capitalized and paid out quickly, and everybody can allow things to progress, and as we've said a few times during the podcast, like focus on the important matter of grieving and all the rest of it. I suppose the mark I would just lay down on this subject matter is perhaps from a more simplistic one, but one which I've seen play out in real time a couple of times, which is you have the property person who unfortunately dies, you have a non-property person who is their life partner, and the whole question of mortgageability comes up. And so,
Yeah.
and it's this question of, one, do you really want your grieving life partner to be filling in, one, to have how many millions of pounds worth of mortgage debt, um, and two, do you want them to be involved in that process? Because that process will have to take place. You might get a period of grace from a lender, but obviously, in pretty a short period of time, very difficult conversations need to be had. And is your obviously there's the issue of the grief, but then there's also the practical applications of, does this person want these responsibilities in their life? The answer may be no. And using debt and leverage is great for making property assets perform well, but it is also what is, generally speaking, the end of property businesses as well,
Yeah.
because it's the debt that kills them, unfortunately. So um again, I think just another kind of call to action there, in terms of, if this is something which is relevant to you, it's about reaching out and taking bespoke advice about what's appropriate to you.
Absolutely. And the thing is, even if um, you have a partner that wouldn't want to keep the properties, or certainly carry on building the property business, you want to give them options. And by having life insurance in place, it gives them options. We spoke about the order of probate before, which is that debts need to be repaid, is number one. And if you do have a spouse and they would struggle to remortgage the properties anyway, then they're going to be forced to sell them. And I always say to property investors, normally we love a probate property, don't we, because it's cheap. So you've spent all this time building up a portfolio, hoping that then you can leave your family in a comfortable position where they don't need to worry. But actually, you've left them with a load of stress,
Mhm.
and they may be forced to sell the properties as quickly as possible, and actually be left with a lot less
Mhm.
than you intended. Whereas if you have some life cover in place, paying into trust, they've then got the option to be able to pay down some of those mortgages, and being a good financial position, which is the whole point of why you've gone through the blood, sweat, and tears, to kind of build up the portfolio in the first place.
I would say that is a perfect end to a podcast. So I'm going to leave it with those words. Other than say, Zoe, you very kindly agreed to offer one-to-one 30-minute consultation calls, so people can just begin to explore this. So, with your permission, I'm going to put that in the show notes,
Yeah,
and
absolutely.
people can book a call and reach out. And then I'm also going to put in the show notes your LinkedIn, your Instagram, and the website, so that people can have a bit of a look and just explore what you're all about. How does that sound?
Fantastic. Yes, thank you.
Amazing. Well, look,
Very much enjoyed it.
thank you very much for coming on the podcast, Zoe. It's a pleasure as always, and I do sincerely hope people reach out. I'm really grateful for your time as well. I know you're a busy woman.
Thank you. Thanks, Paul.
And there you have it, ladies and gentlemen. That's another podcast done. Please join me at the next property and investor breakfast. We can talk about property investing, resilience, and all the other bits and pieces that we've covered this in the podcast. You can attend online or in person. If you've enjoyed the podcast, please subscribe. It makes an absolutely huge difference. Thank you very much for listening, and speak to you very soon. Keep well. Take care.